Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Young-han, professor of economics at Sungkyunkwan University. Professor Han, good afternoon. Thanks for coming on the program today.
Thanks for having me.
Well, the Bank of Korea today, of course, raised interest rates by 25 basis points, a smaller increase than last time when they did 50 basis points. They're trying to get a handle on consumer inflation, and so will likely continue to raise rates. How effective do you think this rate hike will be? And in general, what do you make of the decision?
Well, as has been responded in the market with this somewhat positive turn in stock market, I think the decision made by and announced by BOK was something expected by the market already. And that so-called gradual approach in terms of interest rate, as has been expected in the market, I think has worked in reducing the uncertainty in the market. And I think two factors are most important issues that BOK has paid attention. The first factor is in case Korean interest rate remains much lower than U.S. interest rate, kind of some outflow of the speculative funds are deeply concerned. And another issues are if interest rate is increased continuously, some kind of accumulated private sector debt might be changed to a non-performing loan. So two factors are actually quite a counterbalancing factor itself. I think that rating and balancing the BOK's decision policies. And till now, I think all these policies seems to have been quite stable and has been something as expected in the market.
Right, and it doesn't seem like they're eager to raise rates too fast. On Wall Street overnight, ahead of the Jackson Hole retreat for U.S. central bankers, there was a slight rebound in stocks. All three main indices higher by about 0.2% on the Dow, about 0.4% on the Nasdaq. Traders are cautious right now. What's the story in the global equity markets?
Yes, so I think that cautious kind of response in the market also reflects kind of deep concerns about possible another giant step in U.S. Monetary policies. And because kind of what the data still shows a strong inflationary pressures, but the latest development of the inflationary pressure mainly driven by the oil price and other kind of price hike in food price seems to be coming down. So in that context, I would say the real kind of serious inflationary pressure which might drive for giant step is reducing gradually. So in long kind of term and in long perspective, I would say there is no real kind of threatening negative factor in global stock market.
And here in Korea, Professor, stocks were higher as well. Professors, as you mentioned, investors perhaps relieved to see the Bank of Korea taking action in the way that was expected. Trade volume was fairly moderate. The Kospi up about 1.2%, the Nasdaq about 1.8%. Tell us about the domestic market, Professor.
I think it's Korean domestic stock market works in quite a parallel way as the U.S. market. So I would say it's quite a similar features. In short term, uncertainty has been reduced, but in long term, still not such a real big positive factors, even though, say, at the same time, not that real certain negative factors. So for the time being, I would say somewhat steady kind of stance of stock market might be sustained, I would say.
Right. We'll have to see how those balance out in this short-term positivity right now, and then, as you say, the bigger picture uncertainty. But until we have you on again, Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate it.
Thank you.